Hi everyone and welcome back to Stefan Livera podcast, brought to you by Bold, the place where you can buy and sell Bitcoin over at getbold.io. That's for the American listeners. Now, joining me today are PlanC and Sminston. Now, PlanC and Sminston have been impressing me with some of their work they've been doing and putting out some interesting analysis on power law and MicroStrategy and various aspects of Bitcoin and how it applies. So first of all, welcome to the show.
Yeah, I appreciate you having us. It's a pleasure. Definitely a fan of your show. Definitely a fan of you in general in the space. And yeah, looking forward to the conversation here. It's always something to talk about in Bitcoin and with Bitcoin. And it's just exciting times to be in the space. So looking forward to it.
Yep. I just want to say this is a great opportunity to expand the community, I think, from the quantitative analysis side. Something we've been working on, hope we get to touch on is we're trying to really connect with people on X, obviously, and in social media, and try to, bring some of the quantitative analysis and the data across the board, which is really, I think, what's inspiring us about the space, is increasing our confidence. And I'm excited to get into it with you, Stefan.
Yeah, of course. And so as you guys both know, I recently hosted Cena on, and we spoke a bit about that. But of course, would love to, start from the top. Power law is going to obviously come up as the theme. So it would be good to, define and maybe explain a little bit, or at least how would you explain power law, power curve as it applies to Bitcoin? So PlanC, do you want to start?
Yeah, I'll do the non-technical version of it just for the people that want to just hear kind of from somebody who's not like personally myself, I don't have the background in super in-depth statistics or anything. So I'll let Svensson handle that, but I'll just explain it from a very simple standpoint. For people that are not technical. So in my understanding of the power law is simply, it's a log of time, versus a log of price. But a simple way of understanding it is essentially you're fitting the best curve to combine, a log of price versus a log of time. But a simple way of looking at it is essentially requires more time to have an equivalent increase in price throughout the as Bitcoin grows. So naturally, Bitcoin becomes a higher market cap asset over time. So it's just a little bit takes a little bit more time to essentially get the same gains. And so some people would say, okay, that sounds like diminishing returns. It is technically diminishing returns. So and this is not really debatable from a statistical standpoint. The volatility, if you look at Bitcoin through the lens of volatility, the volatility has actually been coming down since the beginning of Bitcoin in a very systematic way. And so that pattern could break. I mean, everything's possible. I mean, we're always open-minded. We don't get dogmatic with the data. We like to look at all the possibilities, but the trend is very clear. The volatility is diminishing over time up until this point. So we just follow what the data says. And what that means from a power law standpoint is, right now we're averaging about a 45% CAGR per year. So currently, that's the compound annual growth rate, right? CAGR for Bitcoin based on the power law is about 45%. So the power law says that'll, based on the current trajectory of the power law, that would diminish over the next 10 years, roughly speaking, to about 25%. And so it's actually very in line with some of the stuff that Saylor said publicly. Saylor doesn't ever say specifically the power law, but when you compare the power law projections over from now until like 2045, it's his projections are kind of like a ballpark power law, somewhat. He uses a different model to get to this kind of a similar ballpark range. He's more looking at it from a saturation standpoint of like the total addressable market in the world for Bitcoin. So that's kind of how he gets to his numbers based on different saturation levels. But based on the power law, it would still show that we're 45% to 25% over the next 10 years. So and that's compound annual growth rate. Some people might say that doesn't sound like much, but those numbers get very high very quick when you're compounding those kind of levels. And that's an average growth rate, right? And that's also factoring in bear markets. And so in the bull markets, we're going to exceed that by quite a bit. So that's the very simple way of looking at the power law. It's there's a range of probabilities is another way of looking at it. So it kind of gives you this range of probable prices. And we can get into it in more detail, but I'll let Svensson share the technical side of it.
Sure. Sminston, let's hear from you.
Yeah, that was an awesome background there, PlanC. I think from my perspective, I come from sort of a science engineering background, and so I not really a financial expert by any means before I came into this space, and it's really the math and the data and power law being a kind of a key part of what drew me more deeply into the space and doing more of my own analysis. But a power law, in its essence, what really did it from the difference between a power law, and you hear people talk about exponentials or exponential growth, is that you're essentially flipping the coefficient, which is the exponent, in like a very simple math explanation is like what lives in the exponent, like to the power of, versus what's being taken to the power of. You kind of switch those, right? So for an exponential, what's being set as a constant is the growth rate. For a power law, there's actually a changing growth rate, and so that coefficient lives in the exponent itself. So, for example, we can get down into the weeds later, but the difference is in terms of what it implies about a system, like the underlying system, which I knew a little bit about, is that typically when things are exponential, they're not something that's long-term sustainable, or something that's going to have the fuel to grow itself into much larger orders of magnitude. Inherently, what's typical about physical systems, there's a lot of literature out there, there's books out there, there's work from Giovanni on social media, can explain that it typically implies something resilient, robust, and something that's going to have almost a fractal nature to it. So a power law implies that something is going to be carried up in scale by several orders of magnitude. And it also comes with it a feature that it's not going to have a constant growth rate. So the growth rate actually changes over time. So a power law, by definition, because the scaling factor lives in the exponent, it's going to continue to grow much longer and to much greater orders of magnitude, but it's going to slow, the rate of growth is going to slow to some degree over time, and that kind of comes with the territory. So those are a couple key differences, and I think once you understand that this is a true power law, that something can be modeled extremely well with extremely high accuracy, 96% R squared with the power law, it's a very simple model actually. And the fact that it explains so much about this asset's price over its entire history was the most compelling thing to me. And so that's the math aspect of the power law, and kind of when something really clicked for me, once I moved beyond, when I first saw stock to flow early on, saw a couple of other kind of basic looking models, and then I saw power law, and I kind of aha. And it was really around then that I started to go in a lot more substantially on my own, in terms of my own investment. So
fantastic. Well, thank you for that explanation. And I think, in simple terms, as you were saying, people sometimes speak about Bitcoin and they want to say it's going up really fast. And so that's where people kind of say this, it's exponential. And I guess to the point you were making, exponential implies this sort of constant growth rate, as opposed to power law, which implies, let's say, a diminishing returns over time, right? We're going to see this kind of tapering down over time aspect. That's like one key difference you would make there, right?
Yeah, absolutely. And I think, people really who are just discovering this on their through whatever means hear diminishing returns. I think it's a very scary term, but I think once you understand systems like city growth, for example, or organismal growth, or there's all kinds of physical systems. I mean, there's even astronomical systems that follow power laws. You realize that it takes some of that diminishing returns, which also follow a constant rate of diminishing returns, to make it really go the distance and make it long-term resilient, and kind of, to borrow a term, anti-fragile, right? And so, whereas we want to stay away from those of us who are not sort of, want to stay away from short-term trading, or don't have very confidence in what the short-term price action, that long-term, model trajectory is really important. And so we accept the diminishing returns, and even with the diminishing returns, and you can look at the projections for this, the CAGR going out into future decades will continue to outperform pretty much anything else out there. So, yeah. Yeah,
certainly. I think it's a way to be realistic and grounded while, everyone's throwing out random hopium. I think it's an important thing. So I think one topic that would be great if you guys could expand on this is it just an opinion? Is it just drawing charts on a line, or is there something objective? As an example, the high R squared, or can you explain a little bit about why it's not just TA drawing a line, it's not just guys drawing random lines on charts?
Yeah, I can speak to that a bit, and then Svensson, if you want to get into from a technical side, just answer the same question, I guess. But I would say this: I would say I believe there's something a lot deeper here than just a regression fit. And the reason why is there's solid theory behind the power law and why Bitcoin should follow or does follow a power law. And it's not just price versus time. There's actually power laws patterns found throughout Bitcoin. So it's actually the hash rate growth is also following a power law, and also the growth of the addresses. And there's other components that it's quite detailed, but there's other things following it. So I did quite a deep dive on the power law. I actually spent a month straight, pretty much 24/7, just investigating it once I found out about it, because I've looked into on-chain data for years and other models for Bitcoin. But the power law just stood out right away. I actually talked to the guy that discovered it, Giovanni. I got on a 9-hour phone call with him over Zoom and got like the full download from him. So it was quite interesting. Yeah, it was such an interesting conversation. We like talked for 9 hours straight. And so, I mean, it's something that, it seems more fundamental to Bitcoin. And the interesting thing is, to give an analogy, like you talked about before, people think they want an exponential, but the problem with an exponential, and why it can be confusing, and people might think that Bitcoin follows an exponential, is because technically speaking, I believe Bitcoin does follow an exponential, but it's only for very brief periods. So it's actually only during the absolute peaks of the bull market that Bitcoin actually does somewhat shift. And we've actually modeled this, me and Svensson, we've actually looked at this. There is a select period during Bitcoin's market cycles where it does actually go exponential temporarily, but that's always the unsustainable part of the cycle. And then what happens is it grows and collapses. It kind of goes exponential, and then it's not sustainable. Then the price rolls over, and then it actually crashes back down to power law support. And so the support is the bottom. We'll get into charts later on in the show, but the bottom is the power law support. And so Bitcoin goes exponential and then crashes back to that support line. And so exponential, for an example, like what would you rather have? A flash in a pan, which is more like these meme coins and these sorts of like low quality coins that follow an exponential? Or would you rather have Bitcoin, which is more like a big log burning on a fire, right? That's sustainable, kind of like, it's long term, right? It's like you can put kindling on a fire. Yes, the fire looks great for very short term, or you can put a big log in the fire, and now you have an asset class that's going to last for a very long time. So that log, it never goes out, right? So anyways, that's kind of the point. I mean, exponential is, it sounds appealing, but really the power law, I believe it just follows that pattern. It's very clear. And the R squared's getting stronger. So that's one way of looking at it. We actually have a chart for that, but it shows over time. That might be actually a good time to show that one. Spencer can get into it as well, but basically the R squared, so the fit of the data, is only getting stronger over time. And the slope of the power law has been stable for 8 years. Now, this is the chart here. So I might as well quickly talk about this one, actually.
Sure, yeah. Let's get into it now.
Yeah, so this one's really shows it very well. And this was actually created by Svensson. So it's his chart. He's the one that first posted this on X. It's a great chart. And so the bottom there, and correct me if I say anything wrong, Spencer, but the bottom kind of chart there shows the fit of the data, right? So what percentage of the data actually fits the power law, right? And so you can see it's actually become very stable now for the last pretty much 8 years, and it's been trending higher. And so it's at the highest it's ever been right now. It's actually getting close to 96 R squared, or 0.96 R squared, or 96% of the data, is fitting the power law. And then the top chart there is showing the slope. So every power law has a different slope, just like an exponential would have different rates of constant growth, right? You can have an exponential that's only growing at 9% a year, which would be like gold. Gold is an exponential, I believe. Or you can use like M2 money supply or something that has constant growth, right? And then you can have something that has a higher percentage of an exponential that's kind of that consistent growth. But with the power law, the slope, right, has been stable now for really going back about 8 years. And so it's not this pattern. I mean, if you didn't change the power law at all, if you just took the same basically the same slope as 2016 or say 2018, right? If you took the same and you just stopped the data, right? And actually, we've done this. We've actually shown this. Essentially,
like a back test kind of thing, yeah.
Yeah, exactly.
Or more like a forward test, I guess. But yeah, go on.
We actually did forward and backwards. Cena actually did backwards as well. So I believe Cena took like the last 4 years. He did it both directions. He predicted the past and and then also use the past to predict the kind of the future. But if you stop it in, so I actually ran it where I stopped all the data at the third halvening. So I believe it was 2020, and I essentially stopped all the data there. And then what I did is I said, okay, using the power law slope, I'm going to try and get the average price for the next 4 years. And so what I did, and we actually have a chart of this, Spence, if you want to pull it up. We might as well mention it now.
Yeah.
It's the one where it shows, so the average Bitcoin price between the third and the fourth halvening.
Okay.
So this shows it so well, and this actually compares it to stock to flow, and there's actually a huge difference in the accuracy. So stock to flow, I think it's worth mentioning as well. Stock to flow, Plan B created 3 models actually, and so when you have 3 models, it's a lot easier to kind of be accurate because you can jump between models. So he created 3 models. One that showed between the third and the fourth halvening, the average price was 50K, the average price would be 100K, and then the average price would be, I believe, around 288K. So he had kind of 3 models for that window of time between the third halvening and the fourth halvening, right? So between like around 2020 and 2024. And this is the average price. So if you take all the days between that window and you average them out, he had 3 models predicting a 50K average, a 100K average, and a 288 average. Well, the actual average for that range of time was actually 32,000, or say 33,000 to keep it simple. The power law, when you actually look at the slope and you take the power law's kind of slope for every single day and you average out that same window, you actually get within 4.5% of what occurred. So when you stop the testing in 2020, the power law predicted the next 4 years, when you look at the average price, within 4.5% accuracy, which is just incredible. And so people say, well, this can't predict the future. Well, it already has predicted the future already, right? Like because it stopped, it was, if you took it in 2018, I mean, it's already shown predictive potential. Like it has worked, basically, is the point. Doesn't mean it's going to work going forward, but it already has worked. So it's kind of a proven model. So I'll let Spencer go. I talked there for quite a while, but yeah, this is, I don't know what your thoughts are on this, but as far as the accuracy, I mean, at least historically, at least for the last 4 years, I mean, it's been really incredibly accurate for the average price over the halving window. And so I actually did the same thing. I stopped the analysis at Q4, and I said, okay, well, what's the average price going to be for the next 4 years? And it came out with, I believe, 130 or 133. I can't remember off the top of my head, but it's basically saying the average price is going to be 130 or 133 in that range between the halving we just started, right, or just had, and then the next one. So
the 28 halving, yeah.
Exactly, like 2024 to 2028. That window is saying the average price. Now that means we're going to go over that price, right? If the power law, if that pattern holds. Now stock to flow says 500K. So there's a big difference there, right? And so the stock to flow, it gets exponential, right? Then the next halving window, stock to flow says 5 million, right? So there's a big difference between the power law and stock to flow. It hasn't been as apparent up until this point, but they're going to diverge quite a bit. So I'll let Spencer go for a while.
So the out of sample clearly kind of starts to fall apart when you take stock to flow, and I think, which I think is not maybe exactly the same thing as what you mentioned, Stefan, of line fitting or drawing lines, kind of. Doing chicken scratches, a million chicken scratches on a chart to try to see what fits. But it is a good example of something that is just not, when back tested, it really falls apart. When out of sample testing or modeling is done, it falls apart, and it has to be, adjusted, and the model itself doesn't really make sense. The power law, rather, is very elegant. It only has a couple of key parameters in it. It avoids the problem of the pitfall of overfitting, which folks in the financial world and outside the financial world will try to come up with very complex models with a lot of parameters, and they come up with a beautiful looking model that fits the data perfectly, but it has absolutely zero predictive power. That's another problem. The power law. So kind of to go back to your question, Stefan, the power law, is it a power opinion? Some people really take issue with the term power law, and I think a misconception there is that it just kind of comes out of a conventional term from mathematics. And I think you talked about this with Sina a bit in your last episode. I have no issues calling it a power function, power curve. It's just a very simple math equation is all it's referring to. So it's not an iron law of the universe that everything has to always follow power law all the time. but it is a very elegant model that you don't have to worry about the issue of overfitting. It's something that explains the model in its entirety without having to do a lot of fine-tuning, a lot of adjusting over its life. It's something that explains the network growth pretty beautifully in a fundamental sense. So you've got the Metcalfe's law sort of effect, right, where you've got the value of the network exponentiating on top of the growth of the network. So hopefully that kind of answers your question. But I think
sure.
you guys were segueing into this chart just to speak a minute on this. I think this is one of my favorite charts I've ever put together, because for me, again, it was another solidifying look at the entire life of Bitcoin. You can actually see the evolution of, or the stabilization of that exponent. Or if you look at it in log space for the power law, it's the slope, right? It's a linear slope. And so that top plot is that slope, right? Or it's that scaling, it's that exponent. The bottom plot is the R squared. So it's essentially the accuracy, right? It's how much of the data, what percent of the data is explained by the model. This is all power law. And so this I think would connect with a general audience, I think, in an intuitive way. And for me, it does as well. It almost looks like a ringing of a bell. You know, you could like imagine sort of a physical analog there, or you could imagine a thermostat that's trying to reach equilibrium. So there's clearly like a value of pretty close to 6, maybe 5.7, 5.8 for the slope that it's been converging at, like PlanC said, for the last over 8 years. The interesting thing is somebody could have picked this up as early as maybe like 2016, 2017, and put together a pretty darn accurate future projection of the price based on the power law using that scaling coefficient 2016. Especially given that the R squared was like 90% almost. And the first time we saw somebody actually do it, I think there were a couple people, but you know, Plan G, we call him Giovanni, was definitely the first to kind of like post about it. I think it was 2018. And so there were a few years there where it was like kind of ripe for discovering, you know, and they would have been proven to be very accurate for years into the future. So I think this is pretty cool. It looks very much like a physical system from my perspective when I look at this chart.
Yeah, it is fascinating. I think the obvious question people have in their minds is, what would it take to break this thing? Like, could there be something at a fundamental level that changes, whether that is, you know, a new outside source of capital coming in, or maybe something goes wrong with Bitcoin, that there's some unknown bug in the cryptography or the implementation or something like this. What are the things that it would, you know, in your minds, what would it take for it to quote unquote break?
From my perspective, so I think that the B value here, the scale coefficient, the exponent here, this is clearly showing a strong stabilization effect. And so if I started at this stage, the asset's quite mature at this point, right? We've got a market cap of just, you know, like 2 trillion or something like that. And we've got an ever-growing accuracy of the same model that's been explaining it for most of its life. I think the thing I always go to is if the R squared and or the scale coefficient here, being the exponent, started to have a persistent change away from its stabilization point here, which looks like it's 5.7. There are different factors that could start to drive that I think over time, because it does follow a resilient kind of anti-fragile network growth that has those underpinnings, therefore it's a power law. I think the more it exists, the less likely any of those things are kind of going to happen, actually, because I think it's going to be robust against black swan events, for example, like COVID, governments trying to shut it down, over-regulation. To be a little bit hyperbolic, I almost feel like it would take something like an act of God to start to take this thing offline. It's just it's the world's most powerful computer network that's supporting the most pristine, and perfect money that there is, to borrow a term from Saylor. So anyway, to more simply answer your question, I think if I started to see a persistent dive or change in the downward direction for the scale coefficient, for the power law, just following the data, that's what would do it for me. I think it's the power law makes it such that the longer that it exists, the less likely it is for that to occur. Also, as the exponential bubbles don't really have an impact on this whatsoever. So small temporary fluctuations to the upside are not concerning to me whatsoever.
Back to the show in a moment. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices, such as the Cold Card Mark IV and the new Cold Card Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases, you can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold Vault. The Bold Vault is a 2 of 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Cold Card hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. And now, back to the show. I see. So in your view, then, it's essentially if the R squared dropped really low, or hypothetically, then you would start to question, okay, maybe it's no longer valid. And in the framework we're working with here, you can still have these kind of big bubbles up and crashes down where there'll be times where it's above the line and times where it's below the line. But the point is the average price over the cycle still in that range? Then it sort of indicates, okay, it has a high R squared and it still has a good fit. Is that roughly what you're saying?
It's kind of like a health check. Exactly. It's kind of like a health check on how things are going. So you can kind of see when the power law is looking quote unquote unhealthy, and I think it would be near impossible to see that kind of thing happen overnight. It would be something that you're kind of seeing a persistent phase change with, which is, it's always like possible, but I think it's becoming ever less likely that something like that would happen. But I think what you said is correct.
One other question just on this. I'd love to hear your thoughts. I know you guys probably have thoughts on this as well. There's a lot of people in Bitcoin who are talking about, it's an S-curve. There's going to be this S-curve moment, right? And we're just at the knee of the curve, and eventually there's going to come a moment where, the masses come into Bitcoin. And maybe that's, in internet terms, maybe that's like the equivalent of the AOL moment, right? The moment that all these households around America or just around the world just plug into Bitcoin. Do you believe that, basically the power law is still going to stay intact even if such an event were to occur?
Yeah, I would say, to speak to that and to quickly also answer the last question, from my standpoint, as far as the power law, because it is a very common question, like what would actually invalidate or cause the power law to quote unquote break? From my perspective, it's somewhat similar to Svensson's. I would say, technically speaking, the R squared, if it gets kind of lower and lower, it's just a less and less good fit to the power law. At a certain point, I don't know, you could draw like an arbitrary line in the sand and say if it goes below 0.85, then no longer going to use it or something. But for me, if it goes below 90, then that would be kind of like, okay, something might be shifting here because it's been trending up and been at 95 for quite a while. The other way is if it broke below power law support. So at the bottom of the quantile regression that I like to use, if all of a sudden we kind of broke significantly below power law support and kind of stayed there for a while, If that was the case, the bottom band there, that's the blue line. So that's essentially the bottom 5% of the distribution of the power law using a quantile regression. You can also kind of call it a percentile. So it's just showing the probabilities or the distribution range of the data set. And so that bottom 5%, right, which means 5% of the data points have ever gone that low, that we've only gone there during COVID or during the bottoms of the bear markets. We actually went there during the FTX/Luna collapse. We actually went down to the bottom of that blue band again. So if we broke significantly below that, and we stayed there for a bit, that would start to be concerning on my end, probably more so than anything, because that would show a pretty significant deviation to the downside. And I don't think that I don't see that happening unless there's something fundamentally wrong with the network. From a network standpoint, or not network standpoint, from a network effect standpoint, I don't see anything disrupting Bitcoin at this point. I think it's reached escape velocity when it comes to network effects, right? Within the crypto space, within digital asset space, at $2 trillion asset, network effects are there, and just everything about Bitcoin has already reached the network effect, in my opinion. Now. Like Svensson said, an act of God, pretty much. Like it in order to break below, because I think there's something fundamental about that power law support, potentially connected to the mining side of things. So I think it would take something catastrophic. I don't even want to really speculate on the technical side with that, but it would take something really, really significant, in my opinion, to break Bitcoin, the power law to the downside. And then to the upside, I mean, as far as the denominator goes, the denominator we typically use is USD. So it can kind of be misleading where the power law could appear to be breaking to the upside, but really it's just the US dollar essentially collapsing or failing or no longer being a useful denominator to kind of measure Bitcoin against. So you can also look at Bitcoin versus gold as a more stable way of looking at it. You could even chart, and actually Svensson's done this. He actually charted, he has a chart for this. I'm not sure if he's going to show it today, but he charted Bitcoin versus oil, Bitcoin versus real estate, Bitcoin versus gold. So like more stable, quote unquote, stable asset classes. So yeah, I mean, as far as to answer your question though specifically, all of a sudden we get this adoption overnight, this crazy influx of adoption. All of a sudden, Bitcoin's going to just go to this S curve. Now, of course, that's possible. Everything is possible, of course. It's kind of all probabilities. I look at everything more in the side of probabilities, but I don't think that's going to be the case for Bitcoin. I'll tell you why. Other technologies, like you could use like a social media app or something like this. It's so easy to adopt these things as far as you're clicking a few buttons, you're registering your account. There's not as much risk. It's because Bitcoin, people are putting their life savings into this asset class. Even though Bitcoin is spreading as kind of a mind virus, I look at it as there's buffers against that. And so I'm sure you've encountered this, like when people first hear about Bitcoin, there's this natural process where they're not going to overnight just throw all their money into Bitcoin. There's essentially a period of time where you need to kind of learn about it, understand it. And so everyone's going to go through that kind of cycle themselves. But what I'm trying to say is it's not like overnight everyone's going to just throw everything into Bitcoin. I do think because we're talking about literally people's accumulated time, that's a good way of showing it. You can measure Bitcoin as a power law versus other things other than US dollars. And so as long as the US dollar remains stable as an asset or as a currency, I don't see the power law breaking or going into like an S curve myself. And essentially the essence of what I'm saying is it just comes down to, it's just at this point, I think, like I said already, it's reached escape velocity. So, it would take a lot. The main point of what I was saying is simply that people are not, like I said already, people are not going to throw their life savings in overnight. I know some people do, but on the aggregate, on the average, there's a period of time where people have to kind of understand it. They're going to put a little bit in, a little bit more. And so that's naturally going to have this adoption that takes place over a period of time. But that's basically all I want to say.
Sure. Yeah, and I mean, while you brought it up, we might as well go back to the power law probability analysis. I think this would be a really interesting chart for listeners to check out. And yeah, PlanC, if you could just explain a bit about what's going on here.
Yeah, I really like this because it's a very agnostic model. So it's basically not saying like there's a specific peak. I'm not trying to say like, okay, the peak's going to happen at any one point in time. It's just showing, what it's showing is essentially taking the power law And then the fair value line, which is the gray dashed line, you'll see there kind of towards more the bottom third of the data set. So that line there exactly, that's a quote unquote fair value. You can look at fair value in a couple different ways with the power law, but this is using the 50th percentile. So what it's saying is half the data points are below that line, half the data points are above that line. And so essentially half the time we spend above and half the time we spend below that line. And so that's actually at 71.5 right now. So that's kind of the fair value line. Now, during the bull run, we go well above that line, as you can see. Right now, we're about 32% above that fair value line. But that doesn't mean, of course, you should sell your Bitcoin. I don't advocate trading the cycles. I don't advocate really selling Bitcoin in general. I think the only time you want to sell is if, in my opinion anyways, is if, take a little bit off the table to change your life in a meaningful way and basically enjoy more memories with your loved ones, because time is the most important asset, even above Bitcoin, in my opinion. And time is unknown scarcity, whereas Bitcoin is kind of known scarcity. That's how I like to look at it. So, but don't expect to get back in, at a lower point. Anytime you sell your Bitcoin, don't assume you get back in at a lower price. Simply sell if you feel like. So that's where this model comes in handy, because you can kind of assess, historically speaking, where we are in the data set. And if we're at one of the higher quantiles or higher percentiles, you can say, well, if I do want to sell a little bit of my Bitcoin to change my life in a meaningful way, I'm going to do it when I'm getting quote unquote like good value for my Bitcoin, right? I mean,
Right.
we've been here less of the time. So right now it's actually kind of perfect. It shows on the chart there we're at the 66.7th percentile. So what does that mean? It means a third of the time exactly we were above this point. So people think we're overheated right now, or they feel like we're in this euphoric place in the cycle. Well, we've actually been above this level of euphoria or deviation for the power law to the upside a third of the time. So we still have tons of room above us. And that last third is actually where a lot of the, most of the gains really are. And so, yeah, we're at a very healthy level. That top band, the red band there is the top 3% of the data set. So we're only there 3% of the time. That's the 97th to 99.99 quantile. So based on today, one thing people should understand, these numbers increase every day, because essentially over time, with the way the power law works is it's a slope. So we're growing, right? So it's the CAGR, it's that growth rate. And so just so people see these numbers on the chart, that's not predicting the peak of the cycle. That's not predicting, ultimately where we'll be. That's just based on today. So if the price today was at over 195,000, we would actually be in that red band, right? So there's tons of room still. The bottom band, 35 to 43, that's showing kind of the worst case scenario band. So if we had like some crazy black swan, which we've already had many times in Bitcoin, but if we had a crazy black swan, worst case scenario, I could see us going down to kind of like 35 to 45K range, maybe going below 35, just very, very briefly. I mean, you can see on the chart there, we went down slightly below the blue band during COVID, but if you actually look, this is a 10-minute chart. This chart updates every 10 minutes. So we actually only spent about half an hour below that blue band. So it was just the very bottom of that crash. It looks like we were there, but we went below it, but really it was so short-lived, right? So, but anyways, that's basically it. It's just showing the distribution of probabilities. So we can be anywhere kind of in that range. And that orange band. So we don't know for sure how high we'll go, obviously. If you look at the pattern in the past, 2013, we got to the very top of the distribution. We got to the 99.99. In 2017, we got to the same. We got to 99.99. Last cycle, we actually only got to 99.5 for the percentile. So we don't know how high we'll get this cycle. But if we assume we'll get at least to the top 10% of the data set, that would be the orange and the red band. But yeah, if you have any specific questions on it, that's essentially I look at it as a useful tool to kind of like zoom out and be like, okay, where are we, right? Because it's not like a daily trading model or a monthly model, or even really a cycle trading model, although someone could use it if they did want to do that. I look at it more as just assessing kind of where we are and what value you would theoretically get if you sold your Bitcoin, right? And you want to do it to the higher end of the quantiles. So, yeah.
This show brought to you by Mempool.space, the world's leading Bitcoin visualizer. And now they've got an accelerator program. So if you have a transaction that you sent at a fee that was too low to get confirmed, now you can fix this with the Mempool accelerator. The way it works, you can go and search your transaction, scroll down, click accelerator, and you don't need an account. You can pay with Lightning, and then it'll show you it's now in the process of being accelerated, and then after a few minutes, it's confirmed. And so this is a great way to help you out if you are stuck. And this can happen where maybe your wallet doesn't have RBF or CPFP, or it might help you in situations where it's impractical to go and re-sign. So for example, multi-sig with keys in different locations. And thirdly, even in some lightning scenarios, perhaps a forced close, you might not be able to use RBF. And so in this case, the Mempool Accelerator can help you out. So keep it in mind, and you can find out more over at mempool.space/accelerator. Yeah, I like the idea of thinking about getting good value for your sats, right? If you're thinking about, okay, I need to, whatever, if you have a life event coming up, you're getting married or you're buying a house for the family, this kind of thing, then yeah, maybe timing it towards those events. It certainly kind of makes sense, I guess, the way I'm thinking about it at least. I'm curious if you were to sort of expand it out, let's say, in a year's time, will the numbers really change a lot based on, where Bitcoin goes? Or do you think now, because it's been, 15, almost 16 years now, that it's going to be sort of, the path is relatively set?
Yeah, so I think it's relatively set. So you could actually do this in a couple different ways. And the way Sina would say is you should actually stop updating the model. You should actually take kind of a snapshot of where we're at, and you should basically continue on with the mathematical equation for the slopes, right, of the different quantiles. You should basically maintain that slope and just put it out for a year or a couple of years or however long you want to go, and just you take a snapshot so nothing changes. The model becomes basically static. So that's one approach. The other approach is you go a dynamic approach where you are updating it every 10 minutes, which is the approach I'm doing with this currently, where it is updating every 10 minutes. But the actual stability of the model, there's probably rooms for slight movements as far as still kind of stabilizing things. But I think it's 95% or more the way there already. And I don't think in my opinion, Spencer can tell me if he thinks otherwise, there's probably not massive fluctuations at this point. So yeah, to answer your question though, the numbers that is projecting out, especially when you only project out like 1 year, if you project out 10 years, yes, I think there's still, when you're using a dynamic model and you're projecting out 10 years, yeah, I think the numbers for 10 years from now would fluctuate probably pretty significantly. But if you're only projecting out a year, I don't see it fluctuating that much. Actually, Spencer did run a little bit of analysis on this if he wants to speak to it. So, yeah. But that's basically
I guess my 2 cents on that is that it depends on what percentiles of the data you're talking about. So right now, while we're looking at Plan C's, if you look at all the data that's closer to his bottom band there, kind of the support level, it's blue. Everything, so I don't have the chart prepared, so apologies, but I did an analysis a few months back where I looked at the data percentiles, meaning, the lowest percentiles like that blue band all the way up to the top, the full spectrum, right? Kind of what every single quantile, 0 to 100. And I wanted to see from the power law kind of perspective, how does the slope change if you kind of isolate each of those different percentiles? And what I found was that if you look at everything between kind of 0, or not exactly 0, but 1 to 3rd percentile up to like the 50th percentile, which is that fair value 50th percentile. This is interesting. The slope of the power law actually doesn't really change appreciably at all. So it's virtually the same no matter what percentile you model in that bottom 50%. As you start to go to the top 50th percentile, you can see above that fair value line, that's where you start to see a lot of the bubble action, right? And these kind of come and go. They're much greater magnitude, exponential growth, exponential decay. But the data, the closer you get to the top, the less the data tends to spend at those high of those deviations. But I guess the point there being that in terms of the long-term stable price projections, like the trajectory of that 50th percentile line, the support line, I'm way more confident in the long-term stability of those projections in that bottom 50th percentile band, kind of no matter, whether it's the 5th percentile, 33rd percentile, 50th percentile.
I see.
What's I think a lot less, I think what we're still trying to learn more about and gather more data is when you start to go to the higher deviations, right? The tops of the bubbles, for example, is kind of like the least certain territory. So that's kind of maybe how I'd answer that question.
Yeah, Spencer's chart maybe can speak to exactly like this kind of stabilization, because it's similar to this we talked about the power law stabilization of that slope. Well, it's actually similar with this model. He was showing, I think he took different parts of the data set and he kind of projected out the price for the end of this year, and was seeing like how stable that price was based on using all sorts of kind of snippets of the data set. And essentially, I believe it's showing like more and more stabilization over time, so that if you project out kind of like Q4 of next year, those projections were starting to get fairly stable, but it's still uncertain if it's completely stable. So right now, I mean, that blue or the red band is basically for people that are interested. It shows like quite a range naturally, and the reason why it shows quite a range is because at those peaks, I mean, the Bitcoin goes so exponential that there's quite extremes at the tops, right? So it does allow for a bit of a kind of range of that top to occur. So yeah, anyways, it really shows with the red band that we could be anywhere between, if you look at the very end of next year, upwards of 400,000. So if we had the same level of a peak as 2017, which was the 99.99th percentile, so like the very, very top of the data set, if we match that.
Yeah, no, let's talk about this one as well. So you mentioned if it hits the top at the end of 2025, equivalent to 2017.
Yeah, if it hit the exact level of percentile, right, of the data set as 2017 and 2013, right, both of those peaks we got to that point. If we match that for this cycle and we peaked at the very end, say December, we'd basically be almost at 400,000. So that's kind of the upper limits of in my opinion, within the range of what we've seen since Bitcoin. We could go higher. There's a probability we could go higher than that. It's a very low probability. And if that was the case, it'd be the first time we ever went there. But anything like 400 or less is within the distribution. And that red band is essentially between 300 to 400K for that for the end of next year. And then the orange band would be, I can't off the top of my head, maybe 200 to 300 kind of range or something. So, but this is, he can speak to this as far as the stabilization of this model.
Yeah, there's a lot going on here, but just to piggyback off that really quick and try to connect really quickly on this. All I'm doing here, to my point there about the higher percentiles, like once you go to the orange band, red band, this is trying to model the using quantile regression, which we haven't really, I don't know if we'll have time to dive into that, but the quantile regression method for the power law, I'm looking at the specifically 99th percentile of the data, which if you remember back to PlanC's previous chart, that's like up very high up in the red band. So if you look at the bottom plot here, there's a trajectory here. There's kind of like a decay and a stabilization of, and a change. Importantly, there's a change in what you would predict the November 2025 99th percentile price to be if the bubble top were to happen around that time. Right, and so that's why I'm saying if you're using just the quantile regression method for the very tops of the data, things tend to become a lot more certain, I guess, the closer you get to your kind of target point, like the point at which you expect there to actually be a bubble. Does that make sense?
Can you Can you explain the bottom chart, Svensson, what exactly you're showing there? Because basically what he's doing is he's taking only the first year of data and he's trying to predict the price for like November of next year, and if you use only the first year of data, it would have said we'd gone to $1 million, right, or 1.2 million.
Yeah, this is like all of this is trying to predict if the bubble top happens in November of next year of 2025. All that bottom chart is showing that if you were to try to do that using the 99th percentile quantile model, running that in July of 2013. The point here is that you would have kind of like way overestimated it, right? And then once you start running that in kind of, there's a trajectory right there, right? And so once you start doing it in 2020, you're kind of like estimating around 400,000, and now we're in July, we're kind of like a little above 200,000 or 200 or like 274,000. Last time I ran this is what we're kind of projecting. So, but it's stabilizing. The change is not as large in recent months, right? In recent years. So it's probably going to be we're much closer to what it's actually going to be. But that's the difficulty with trying to predict the actual bubble tops. But I do have a different model that I think may hold some weight if we have time to get into that. But yeah.
Yeah. Okay, one other thing I'm curious to get your guys' thoughts on. I think PlanC, you were talking about this idea as well of a possible extended cycle. Could you explain a bit about what you mean there? What could that look like?
Yeah, I mean, the theory here is, I mean, a lot of people, because I guess they almost have PTSD because, previous cycles we go into the bull run, and some people have said, okay, the super cycle, this extended cycle, different ways of referencing it. And because in the past it hasn't happened and we've just kind of stuck with this 4-year cycle, people are somewhat opposed to the idea. I ran a poll on X, they got a few thousand people, and so it was a decent sample. And I think it was 3/4 of people, from off the top of my head, 3/4 of people expected the 4-year cycle to continue, and there was about a quarter that said, okay, I'm open to the idea of an extended cycle. So still the majority, at least on that small sample size, seem to think this 4-year will continue. And in the 4-year, in my opinion, it's not about the halvenings, although initially it might have been maybe the first couple, maybe really early on it was about the halvenings, but I do think at this point it's not anything to do with the halvenings. I think it's basically a combination of adoption, and then it's more to do with the liquidity cycles, which are closer to around 4 years. So I think it's mostly the cycles of Bitcoin are more so driven by liquidity and adoption. And so assuming a relatively stable growth amount of adoption, we would kind of get, if we have the same amount of adoption in the cycle and the liquidity cycle plays out the same, then under those conditions, you would expect kind of the 4-year cycle to continue. That's basically my point. Now there are some caveats though, because I believe, so we'll go with that. So it's essentially, but if we pull forward a lot of adoption, meaning if we have like nation states, all of a sudden overnight, game theory kicks in and they're all competing for Bitcoin, well, that could pull forward a ton of adoption, right? And what Saylor's doing could pull forward a ton of adoption. So if we kind of, and also just the fact that we have kind of a crypto friendly regime in, that could pull forward quite a bit of adoption as well. So if we pull forward a lot of adoption, and we have in that case, maybe that adoption is enough to essentially create a tailwind that is strong enough to counteract the headwind that would be the liquidity cycle. So the normal liquidity cycle would be kind of overcome by the crazy degree of adoption, not to mention the ETFs and all these other things as well. So if there's enough adoption pulled forward, is my main thesis, we could essentially have a bit of an extended cycle where we're able to overcome the liquidity cycle to some degree. Or liquidity cycle might play out slightly differently. It might be slightly extended. There's always a little bit of that possibility. But even if we don't get an extended cycle, I think the other possibility is we have a bit of a muted bear market. Now, the reason why I say that is because I believe at this point the discount of Bitcoin going to zero is essentially gone. So in previous bear markets, during the fear part of the cycle where people are panic selling and we're kind of capitulating in the bear markets, there's always been in the past this like back of the mind, okay, could Bitcoin really just go to zero here? And I think that's always created a bit of a discount. I mean, obviously the OGs and people that have held Bitcoin for a while that are really versed in it, they never really thought that. But there's a percentage of the market that kind of had that, okay, we could go to zero moment. And in that case, I think it's been a large part of the reason why we've had these like 80% drawdowns, right? 85 even. I don't think that's, in my opinion, I don't see that happening anymore. I think if anything, we have a muted bear market where maybe we drop down anywhere between like 40 to 60%. I mean, I kind of see it one of those two ways, a bit of an extended cycle, depending on what happens with nation states this cycle and Saylor. Although I don't think Saylor by himself is enough. He would have to be buying just tremendous amounts. I mean, he's put this 42 billion out for the next 3 years. I think he's going to go through that way quicker, and he's going to buy a lot more. But even under those situations, under the circumstances, I still don't think it's enough by himself. He's going to require multiple players. So anyways, I'll let Sminston go. I want to give him a chance to get into some stuff here too.
Well, I think I don't disagree with that at all. I think I mean, I would just say that I totally buy into the thesis that we're shifting from significantly shifting from more retail to more of the institutional market movement here, and that's what's kind of like we're going into what's defining the cycle. So I don't know, I don't really have a strong opinion on that. I too kind of go back to sort of the laws of scale here, and I think that it takes much more money inflows and market moving to move a similar amount, to move the needle a similar amount in these bubbles for this next one. And I think that's part of like what we kind of expect here. So it might all come out in the wash and we'll get like a pretty predictable bubble size. But I don't know about market timing. I think PlanC is actually much more read and an expert on that. So I'm just going to go with what he said.
Yeah. Well, I think you're right about the, I mean, it's this insight. If you accept the insight of, okay, diminishing returns, diminishing volatility over time, it kind of implies this anyway, right?
Yep. Exactly. That's my thinking. So, yep.
Yeah. Okay. So any other charts you wanted to show us that we haven't got to yet?
Well, if you don't mind, because we were on the topic of sort of bubble tops and the cycles here, I could do a quick explainer here, but ask any questions and we can stop anytime. But something I've been really focused on and sort of, I'd like to think I made some headway on is exploring. So I made this Decay channel Oscillator, and so I've started doing semi-routine updates on this. And so you can see this is all normalized from 0 to 100%. And this is meant to be something it's all based on the fundamental power law support, right? So that's the 0%. And I think it looks pretty nice for various reasons, but quantitatively it's compelling, which I'll get to. But what it's doing is it's telling us basically where we are at any given point in time for all of its history, including today, between that 0% power law support, like as low as you can go, to maxed out, not in terms of price, but in terms of percentage between that channel. And so the channel specific, so a lot of people ask, well, because they weren't there in the earlier history when I was developing this, is like, how is this made exactly? And what does this mean that we're we're not exactly at 50%. We're a little bit lower now because we're at 93,000, but this is from, a few days ago. But what does 50% charged on this map mean? To me, it means we're about 50% heated in terms of the difference between the cycle price top and the possible price bottom, which is set by that power law. So it forms a channel. This is the 2024 snapshot. Maybe I'll come back to that. So this is the way that I basically constructed it, and I put this together as an illustrative tool. So the bottom left is that oscillator that we're kind of tracking, and right now we're like hovering around 40-50% heated, kind of like right in the middle zone, right? So we've got about 50% of the way to go. So how do I build this? So the 100% mark is actually, if you go to the top left quadrant, it's that upper bound, the dashed line. And the way I form that upper bound dashed line is I take the cycle top data points from every single cycle. So you can kind of see them in red here. 1, 2, 3, 4. There's four data points. And then there's the power law support line, which is the 5th percentile power law. That's the solid white line. The dashed line is simply taking the deviations to those maximum points in every single cycle, and then measuring the exponential decay that's formed by that. And then you do kind of a math trick, which is you multiply that exponential function with the power law function. And what you get is you basically get an exponential decay that's overlaid onto a power law. And so you can see it's decaying at a certain rate, and that window or that channel starts to close over as the further you go out in time. That volatility, it's projecting that volatility gets smaller and smaller, which is like the diminishing returns that you mentioned, Stefan. It's another way to look at it. So I'm just trying to create like an upper and lower bound here. The freaky thing about it, and I did some analysis on this before, is that it's a small amount of data points, but the fit of that exponential function is like 99.9 or 99.8 r squared with a very low p-value. So it's it's not a lot of data, and so like I want to take all of this with a grain of salt, but it's compelling enough to where I'm tracking and developing it. It's kind of my point, and I think it's also happen to think it's conservative. But anyway, this is log space, so this is kind of the line that you can't unsee that we see with the power law. And then if you transform that to log in the y-axis and then linear in the x-axis, you get another chart that looks pretty familiar, and that's kind of what it looks like in log linear. This would be more like what PlanC's chart is, right? Like a log linear chart. And then you can convert that to linear, which is like kind of what the old school financial analysts are used to looking at other assets in. So it's just linear time, linear year, and then linear price. And so it's all the same channel that's formed in every single one of these. And the oscillator is just showing what percentage between the top and the bottom you are at any
Interesting.
given point.
And I will point out, actually, for people who are fans of the whole S-curve adoption, if you look at linear, and you zoom out, it kind of can look like an S-curve, but just, on a zoomed out way, right?
Yeah, it has some S-iness to it. Yeah, I think that for the tops at least, and I don't know what exactly to make that. I think it's more of a decay on top of a power law. Going back to your earlier question, I don't know what's going to happen to the power law in the future in 5, 10, 20 years.
Right.
I tend to take a page from Giovanni's philosophy, which is like, we have the data that we have. We don't have any indication of things turning into a Y-bull or sort of an S adoption curve at this point. Not to say it couldn't happen in the future, but I don't see any fundamental reasons why we're looking that we'd be going to that territory. But we could.
Hey, Spencer, do you want to share, roughly speaking, the price, if you feel comfortable, like kind of Q4 of next year? What is the decay channel
sure.
for the tops? Because some people might find that interesting.
So this is so I just ran this again. So this is the same thing. I'm showing the inset is the oscillator view, which I update semi-regularly, once or twice a week. And then this is just the linear view on the bottom, right? So this is showing what it implies, and it's not really important, the difference. It's not too important, at least, the difference between the blue and the white tops there. It's sort of within error, but basically what we're showing is that sometime later in 2025, it implies the potential to break out beyond 200,000. And so just throwing out the caveat that, yes, the work that I do around here tends to be on a little bit more conservative side than what a lot of the kind of the mooning work that a lot of other models that are out there. But it's kind of hard to model the tops, and it's hard to walk that line of like, do I want to be over conservative or do I want to be over optimistic? It's like, so I think I just try to be really transparent, and I try to be slightly on the conservative side if I can. And I'd love to be proven wrong, and I'd love the bubble top to here to explode past this to 300,000-400,000. I wouldn't be angry at that at all from a financial perspective, and it wouldn't shake my confidence, importantly, in the fundamental power law, which is really mostly defined by the kind of the support line.
Right, because the average could still work out over the 4-year period, let's say.
Correct.
Yeah.
Correct. Yep. So that's what it implies, and I will put one more asterisk, is that another development in the next week, and I just gave a preview of it yesterday, is that there's some assumptions with this model. Like one of the assumptions is that over enough time, the volatility diminishes to, basically the tops converge to, but never quite touch the bottom. So intuitively, some folks might think that, well, that doesn't really make sense, even if it's 50 years from now. So I actually have a sensitivity analysis coming up, just a quick preview, I guess, which shows a little bit more of a bullish case. So now you're talking about being more comfortably in the 200,000 range if you assume that like the volatility drops to half of that or a third of that or something like that. So there are a couple of knobs there to turn. So just wanted to give that caveat.
Interesting. Okay. Yeah. So I guess let's try to summarize a few things. As we've mentioned, there are some interesting implications here of power law or power curve applied to things like the number of Bitcoin addresses, Bitcoin's hash rate, and of course Bitcoin price, like we've spoken about. Might be some interesting implications for people in the world of finance, whether they are advocating or helping educate their own customers about Bitcoin. Maybe even for the builders in the space, they may be thinking, well, maybe the number of users or the number of addresses, maybe that influences the way they build or develop something in the space also. So maybe those are some interesting implications. So just any final closing thoughts from both of you guys?
I would just say that I think the fact that up until this point, Bitcoin has followed a power law growth pattern, should give people a lot of confidence that it's a very stable, at this point, a very stable asset. It might not feel that way day to day, right? Sometimes the price can move up and down quite a bit, although the volatility does appear to be coming down, or is coming down, really. I would say, it's a very healthy growth pattern. It's a very long-term growth pattern, and it's something that we just keep observing, and as long as it keeps following it, it's great for anyone building the space, because they can be very confident that Bitcoin's not going anywhere. Obviously people know that have been studying Bitcoin and all the reasons why it's very a very amazing invention and asset class. But yeah, I mean, that's basically it from my perspective. I mean, I just love following the data, just seeing where things go. But there's no signs that this is going to break anytime soon. And if it does, I'll be the first person to be posting about it. That's for sure. So yeah, that's pretty much it. I'll let Spencer go.
Sminston?
Yeah, great, PlanC. Thanks again for having us on, Stefan. This has been awesome to come on your platform. Thank you. My closing would be, I think power law is elegant. It implies that the underlying asset here is anti-fragile and that it's following laws of scale here, that it has more orders of magnitude to cover. And I think it implies that we have like a 5 to 10 year window here ahead of us, where I think that it's an asymmetric opportunity, unlike anything that will probably ever happen in our life in most of our lives. If you track the power law of the CAGR, which goes along with this, right? Compound annual growth rate is doing sort of an inverse power law. So if you imagine it decaying over time, that is measurable. It's accurate. It's the same. It's just a translation of the power law. But like a couple data points here is that it will not diminish to the same CAGR of, say, an S&P 500 until somewhere around the year 2071, thereabouts.
Oh, wow.
And it won't diminish to what we're having as the average rate of monetary inflation in the U.S. until about the year 2105. And so, you still want to be doing significantly better than that. And I think if you take a look at the math behind this, especially over the next 5 to 10 years, it's probably one of the best asymmetrical opportunities. And certainly I feel like that personally based on the math. So, thanks for hearing us out, Stefan. This has been awesome.
Fantastic. Well, so listeners, check PlanC and Sminston out. Links will be in the show notes. They also have the X community called Best Bitcoin Data Family, so guys, go and join that. And you also have the Best Bitcoin Data Show. So links will all be in the show notes. And once again, thank you, PlanC and Sminston, for joining me. It's been a really great discussion and fascinating to see where things go, whether the power law stays intact or not.
Yeah, I definitely appreciate you having us on. We're huge fans of you and just your work and being one of the OGs in the space. Love your podcast. And so, thanks so much for having us on. Really appreciated it, the opportunity, and look forward to keeping the conversation going.
Likewise for me. Yeah, it's an honor, Stefan. Thanks for all you do in the space.
Thank you.